Welcome to another exciting episode of Financial Insights in Minutes. Is the economy on the brink of disaster? We'll break down the latest warnings about a recession and what the housing market signals mean for your investments.
Expert predictions on a stock market crash will have you on the edge of your seat, and we'll uncover what's next for Bitcoin.
Don't miss this critical financial news review. Your wallet could depend on it. Stay tuned to Financial Insights in Minutes for time-saving summaries of the day's top real estate market videos.
Today, we're going to provide summaries of the following videos.
First, Nick Gurley talks about a skyrocketing 23% rise in car repossessions and what it means for our economy. Next, Stephan gives us his proven hacks for achieving a perfect credit score for free. Ken McElroy provides his take on the border crisis and its ripple effects on the U.S. economy. Eric Nelson reacts to Clear Value Tax's latest housing market analysis with hard-hitting critiques. Jason Walter covers the concerning rise in new home sales inventory, hitting a 16-year high. Chris Lopez argues why single-family rentals may not be the golden ticket to cash flow. In another update from Eric Nelson, he dives into the inventory surge and new home sales meltdown. Finally, Jason Walter discusses the alarming drop in U.S. home sales to a nearly 14-year low. Welcome to Reventure Consulting on YouTube. Today we've got a topic that might just make you clutch your car keys a little tighter. We're talking skyrocketing car repossessions in America.
Definitely a subject to keep your eyes on. Nick Gurley breaks down how this alarming trend signals greater economic troubles for 2024.
Let's cut to the chase. What's the central thesis of Nick's video?
Nick reveals that the U.S. is facing a 23% increase in car repossessions year over year. This points to significant financial stress for consumers, suggesting tougher times ahead for the economy.
Wow, 23%. That's a hefty jump. Let's delve into the key points. What's behind the spike in repossessions?
During the pandemic, repossessions dropped thanks to the government's financial aid. But since 2021, they've soared, surpassing pre-pandemic levels. This shows consumers are struggling more and more.
I see. And the used car market seems to be taking a hit as well.
Absolutely. Used car prices have nosedived 23% from their pandemic peak. Many who bought cars then find themselves with loans way higher than their car's current value, prompting abandonment.
Not good at all. Subprime auto loans, what's going on there?
Subprime auto loan delinquencies have hit record levels. Predatory lending practices are partly to blame, much like the subprime mortgage fiasco from the 2000s.
Yikes! So what are the broader economic implications here?
It's a stark contrast. Markets look strong, but consumer financial health is tanking. Lower income groups in particular are feeling the squeeze, stressing household budgets with high car loan payments.
Crystal ball time. What does Nick predict for the near future?
Nick foresees ongoing financial struggles, especially spreading to middle-income earners. Economic strain isn't stopping anytime soon.
And what about inflation and potential rate cuts?
Expect continued depreciation in used car and rental markets, pushing inflation lower. Though rate cuts are likely, they usually precede worsening economic conditions before recovery.
So wrapping it up, what are our big takeaways?
The spike in car repossessions is a glaring warning. Consumers are in trouble, and by extension, the economy could be in deeper distress. It's a call for caution, especially in interpreting the Federal Reserve's future actions.
Welcome back to another fantastic episode on the Stephan YouTube channel. Today, we're diving into Graham's personal journey to achieving a near-perfect credit score of 847, which he breaks down step by step. Along the way, he shares some tricks of the trade that can help you improve your credit score without spending a dime.
Oh, this is going to be great. Whether you're a credit score newbie or a seasoned pro, Graham's insights and practical tips are sure to elevate your credit game. Let's get started.
So what's the big idea behind this video? What's Graham's main message?
Graham's core thesis is that achieving a high credit score, even close to a perfect 850, is much easier than most people think. By following a series of smart financial habits and leveraging some underrated shortcuts, anyone can significantly improve their credit score.
All right, let's break down the key points. How does Graham dissect the credit score components?
Great question. He explains that your FICO credit score is made up of 5 components: payment history, 35%, credit utilization, 30%, length of credit history, 15%, types of credit, 10%, and recent inquiries, 10%. Always paying your bills on time, maintaining a low utilization rate, and keeping your accounts open for a long time are crucial.
Nice. And what about his own credit report? Did he spill any beans?
Absolutely. He laid it all out. Graham's credit report includes 0 late payments, 0 accounts in collections, and 0 derogatory marks. His utilization is between 0 to 1% on a $161,000 personal credit line, and he usually pays off his balances before they're due. Gotta love those round numbers, right?
Impressive. So what shortcuts does he suggest for boosting a credit score?
He recommends applying for no annual fee credit cards to build long-term credit, becoming an authorized user on someone else's account, and keeping your credit utilization below 10%. He also endorses tools like Experian Boost to add positive trade lines from phone and utility payments.
Super helpful. But what about common mistakes to avoid?
Great point. Graham advises against carrying balances and overspending. Becoming an authorized user can backfire if the primary cardholder has a poor credit history, so choose wisely.
All right, let's gaze into Graham's crystal ball. What predictions does he have?
Graham predicts that by diligently following his steps, including maintaining low utilization and multiple lines of credit, most people can achieve a high credit score within 2 years. He also warns that with increasing data breaches, freezing your credit reports when not applying for credit will be more crucial than ever.
So, to wrap things up, what are the big takeaways?
Graham emphasizes that a good credit score is key to building wealth and getting great loan terms. He recommends following his straightforward steps, leveraging tools like Experian Boost, and protecting your credit by freezing your reports when not in use. Smart, simple, and effective.
Welcome to Ken McElroy's YouTube channel. Today's hot topic: while everyone's glued to the election drama, we're turning our eyes to the border crisis. Ken McElroy is here to unravel the chaos and implications of what's happening at the U.S.-Mexico border. Hold on to your hats.
Absolutely. The border's more than just a line in the sand. It's a major issue affecting millions. Ken's expertise brings a fresh perspective to the table. Let's dive right in.
All right, so what's the main takeaway from Ken's discussion about the border?
The essence of Ken's argument is clear. The border crisis is spiraling out of control with 10,000 illegal crossings every day. He asserts that our current policies and political bickering aren't cutting it. We need practical solutions. Pronto.
Let's break down those key points Ken talked about. How bad is the crisis?
It's pretty dire. We're talking about 10,000 illegal crossings a day. Ken points out that catch and release is more like welcome and fly you in. It's mayhem.
Wow, that's intense. And what about these trafficking networks?
Oh, it's a whole racket. Traffickers make a killing by setting up specific routes from various countries. These operations are controlled by Mexican cartels who fight over border territories, or plazas, like their prime real estate.
And how's this playing out politically?
Interesting twist there. The migrant influx is flipping traditionally Democrat southern counties in Texas to Republican. It's turned political strategies on their head.
What about the social and economic fallout?
It's a ripple effect nightmare. Higher crime rates, lower wages, housing shortages, especially hurting lower-income folks. Plus, local businesses struggle to find labor for tough jobs, relying heavily on immigrants.
So, what's Ken's take on fixing this mess?
Ken's all about a merit-based immigration system and robust work visa rules. He also calls for stronger U.S.-Mexico cooperation to combat the cartels. Think Colombia or Iraq, but hopefully with a happier ending.
All right, time for some crystal ball predictions. What's next, according to Ken?
Ken predicts the border crisis will keep shaking up U.S. politics, possibly turning more blue districts red, especially in states like Texas. He also foresees prolonged strain on low-income communities, with increased crime and housing shortages.
Wrapping it all up, what are the big takeaways from Ken's discussion?
Ken's key message is that the border crisis needs urgent, practical solutions: merit-based immigration, robust enforcement, and international cooperation. He emphasizes the need for bipartisan effort to tackle these challenges head-on. Wise words for stormy times.
Welcome to Real Estate Mindset. Today's showdown features a reaction to Clear Value Tax's latest housing market analysis. Buckle up, because our guy Eric Nelson is ready to throw down some hard-hitting critiques.
Absolutely. Eric isn't just here to critique, he's here to enlighten with a fresh perspective. Let's dive into the details.
So what's the main beef Eric has with Clear Value Tax's video?
The crux of it is that Clear Value Tax's review of the housing market is superficial, potentially misleading viewers by not using multiple data sources to get a comprehensive view of the market.
All right, let's break it down. What's the deal with the market data discrepancies?
Nelson points out that there's an $80,000 swing between median home prices on Redfin and Zillow. He argues that relying on a single data source can mislead viewers, especially with such large discrepancies.
Ouch, that sounds like a minefield. What indicators are we talking about here?
Absolutely. Nelson highlights the yield curve inversion and increasing unemployment rates as historical red flags for a recession. Despite record high home prices, many recent buyers are upside down when you factor in selling costs.
All right, let's get local. What should viewers take away about local market analysis?
To grasp local market conditions, Nelson stresses the importance of using MLS data and comparing properties within specific subdivisions. A broad national perspective simply won't cut it.
All right, time to look into the crystal ball. What's Nelson predicting?
First up, he sees a recession as imminent, backed by those telltale indicators like the yield curve inversion and rising unemployment. This is likely to trigger a noticeable drop in home prices.
Got it. Any other predictions?
Indeed, he foresees a near double-digit nominal price decline by the end of 2024. This prediction is based on weak housing market fundamentals and today's stronger leading indicators compared to 2022.
Let's wrap it up then. What's the final takeaway?
Nelson urges caution and a more nuanced approach to forecasting the housing market. He believes a well-rounded data triangulation strategy is key to preventing misleading conclusions and stresses the significance of local market analyses.
Hey there, YouTube fam. Welcome to another episode on Jason Walters' channel. Today, we're diving into the latest buzz about new home sales falling in June and inventory levels skyrocketing.
You guessed it, we're tackling the headline, New home sales fell in June and inventory is skyrocketing. It's a roller coaster ride, so buckle up.
So, what's the big takeaway from Jason's report? What's the main concern here?
The core issue is that the inventory of new single-family homes for sale in the U.S. hit a 16-year high, and despite lower mortgage rates, new home sales dipped to a 7-month low in June.
All right, let's break this down. What's the deal with new home sales?
In June, we saw 617,000 new home construction sales, down 6% from last month and 7.4% year over year. Forecasts had predicted 639,000, so this was quite a letdown.
Ouch, and mortgage rates? They dropped too, right?
Yes, the average 30-year fixed mortgage rate fell to 6.92% in June, its lowest in 3 months. Even with incentives from builders like closing cost credits and lower mortgage rates, buyers weren't enticed enough.
Sounds like a tough gig. How are inventory levels doing?
Inventory hit 476,000 units, the highest since 2008, with a 9.3-month supply available. This is way above the historical norm of 4 to 6 months.
Yikes, any regional differences?
Absolutely. Sales increased by 1.4% in the West, but fell in the Northeast and Midwest by 7 to 7.7%. The South saw a significant 12.2% drop, which heavily influenced the overall decline.
What about prices? Any changes there?
The median sale price for new homes in June was $407,300, relatively flat year over year. However, prices have surged tremendously over the past few years.
And those completed homes, what's up with that?
There are 102,000 completed homes for sale, nearly a 2-decade high. Builders might slow down new projects if these can't sell, given the sunk costs involved.
All right, crystal ball time. What's ahead for the housing market?
If unsold completed homes keep stacking up, builders might pump the brakes on new construction. Additionally, we could see a market correction as high inventory and tepid demand persist.
Wrapping things up, what should buyers and sellers take away from this?
Jason emphasizes the importance of staying informed. the growing inventory and falling sales signal potential challenges ahead, despite appealing mortgage rates and builder incentives. Always do your homework and consider regional market conditions before making any moves.
Hello, BiggerPockets community. Today we're diving into some groundbreaking insights from Chris Lopez. He just dropped some truth bombs about real estate cash flow in his latest video titled "Want Real Estate Cash Flow? Don't Buy Single-Family Rentals." The buzz? Single-family rentals might not be your golden ticket to cash flow after all.
That's right. Chris and his team at Property Llama crunched the numbers from almost 7,000 properties to bring you the real deal. It's time to rethink our traditional real estate investment strategies.
So what's Chris's big revelation? What's shaking up our real estate world?
Chris argues that single-family rentals aren't the optimal choice for achieving cash flow. He makes a compelling case for multifamily properties, which provide significantly better cash flow and return on equity. Forget cash-on-cash return. It's all about cash on equity.
All right, let's break this down. What's wrong with cash-on-cash return?
For starters, cash-on-cash return can be misleading. It uses outdated investment costs and ignores the current value of your equity. Chris introduces cash-on-equity return, which bases calculations on current equity, giving a more accurate measure of performance.
Interesting. And how do multifamily properties stack up against single-family rentals?
The data says it all. Single-family homes have a negative 2% cash-on-equity return on average. Meanwhile, large multifamily properties boast a 5.6% return, and smaller multifamilies hit around 3.5%. It's a no-brainer.
That's a stark contrast. Now, what about converting equity into cash flow?
Chris lays out 4 scenarios for converting equity into cash flow. Options include paying off the rental property, cash-out refinancing, using a 1031 exchange, or selling the property outright for a lump sum. The last option, though controversial, often yields the most substantial benefits compared to monthly income.
So, what's on the horizon according to Chris?
Expect a shift. Investors will move away from single-family rentals and explore multifamily properties for better returns. Market trends will likely reflect this newfound wisdom, leading to a decline in single-family investments.
Let's wrap this up. What are Chris's final thoughts?
Chris emphasizes that cash-on-equity return is key for a realistic perspective on property performance. He urges investors to reassess their portfolios and look for ways to convert equity into more lucrative cash flow. The ultimate goal? Simplify life and invest smarter to achieve the lifestyle you dream of.
Welcome to Real Estate Mindset. Today's episode promises to be explosive as we dig into what's causing the recent meltdown in new home sales. Joining us is Eric Nelson, the real estate guru who's got all the latest data and insights.
That's right. Eric delves deep into the current state of new home construction, giving you all the details you need to navigate this volatile market. Stick around, it's going to be a wild ride.
All right, hit me with the main takeaway. What's Eric's big argument in this video?
Eric argues that new home construction is facing significant issues, leading to a rapid increase in housing inventory. The key takeaway? If you're in the market, you need to stay informed to dodge potential pitfalls.
Got it. Let's dig into some of those key points Eric discussed, starting with new inventory. What's happening there?
New home construction is the main source of new inventory. In hotspots like Austin, Texas, prices are slashed by $40,000 to $60,000 for homes in the $200,000 range and below. It's like a clearance sale nobody asked for.
How about permits and housing starts? Are we seeing any trends?
Absolutely. Permits saw a month-over-month surge to 1.45 million from 1.39 million, adding around 51,000 more permits. Total housing starts increased from 1.31 million to 1.35 million, which is about 40,000 more units in just a month.
Homes under construction have been a big focus too. What's the scoop?
Homes under construction are down to 1.56 million from 1.58 million month over month. But get this, compared to December 2019, there's a whopping 490,000 additional units.
So what's going on with sales prices for these new homes?
The median sales prices for new homes are being revised downward continually, showing that the market's being manipulated. It's like trying to hit a moving target.
And what's happening with supply and demand?
With over 9 months of sustained supply, it's clearly an extreme buyer's market. The oversupply is starting to drag down existing home prices too, especially in overbuilt areas.
All right, time for the crystal ball. What predictions did Eric make about the housing market?
Eric predicts that new home prices will keep declining, impacting the existing home market. Plus, expect more downward revisions in sales prices, painting a grimmer picture ahead.
Wrapping it all up, what are the big takeaways from Eric's analysis?
Eric underscores the need for strategic caution. With the new home market in rough shape and oversupply issues, consumers must do thorough research. Avoid getting trapped in bad deals. Knowledge is power, folks.
Welcome to Jason Walters' channel. Today's topic is hotter than a summer sidewalk. We're dissecting why U.S. home sales have nosedived to nearly a 14-year low, even though house listings are soaring.
Yes, Jason's unique take is like a tall drink of water, refreshing and essential. He breaks down how increasing inventory isn't translating to higher sales and the complications of record-high home prices.
Summarize it for us. What's Jason's main point in this video?
Despite a rise in housing supply to a 4-year high, home sales have dropped significantly, hitting nearly a 14-year low. Median home prices have hit a new record high, but are losing momentum due to more listings and affordability constraints.
All right, let's break down those key points, starting with sales and supply. What's happening there?
Home sales dropped by 5.4% in June compared to May, and with this year's pace, we're looking at potentially the lowest sales in 3 decades. On the flip side, we've got housing inventory reaching a 4-year high with 1.32 million units available.
So, what's making homes less affordable?
Sky-high interest rates and home prices. The median home price just reached a record high of nearly $427,000, which is making it tough for buyers to jump in.
Interesting. Now, what about regional differences?
All 4 major U.S. regions, Northeast, Midwest, South, and West, saw decreases in home sales. That's right, everywhere. But on the bright side, inventory is up across all these regions, which might cool down those hot prices a bit.
Jason's predictions must have been something. What's he saying might happen next?
First, a slow shift towards a buyer's market. Buyers might finally get a break as negotiating power tilts in their favor. Second, if trends keep up, this year could set a 3-decade low in home sales.
Wrapping up, what's the big takeaway from Jason's breakdown?
Jason emphasizes cautious optimism. While an emerging buyer's market could stabilize prices, affordability barriers are still a big hurdle. The rise in inventory suggests we're entering a period of market adjustments, making the next few months crucial for buyers and sellers alike.
Nick Gurley sounded the alarm on the U.S. economy with the spike in car repossessions.
Stephan gave us practical tips to achieve a perfect credit score.
Ken McElroy tied the border crisis to broader economic implications.
Meanwhile, Eric Nelson critiqued Clear Value Tax's housing market analysis, while Jason Walter flagged the rise in new home sales inventory and falling sales.
Chris Lopez showed us why multifamily properties might be the way to go for cash flow.
Despite differing opinions, our experts agreed that the housing market is exhibiting troubling signs and that the broader economy could be on shaky ground.
Their disagreements focused on specific indicators and solutions, such as the effectiveness of rate cuts and the future of real estate investments. Thanks for watching Financial Insights in Minutes for July 26, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.